Good morning. It is Thursday. It is the Bubba Show, and here we are. And today I thought we would talk about the recession and possible deflation. I think these are two very important things that are actually happening, but right beneath our nose in the markets. And I think it's important to understand what's going on because, again, as we talked about yesterday, the Fed and their policies and how they've artificially lifted the market. While nobody's been watching, some of the commodities have started to deflate, some of the prices have started to deflate, and the markets, the country is still in recession. We are still lacking jobs. We are still lacking policy. And you have to understand that without people working, when people aren't working, they're not spending. When people aren't spending, prices have to come down to create activity. It's the same concept of what the markets are doing with general conditions, is they're moving money around trying to force the action. And as we see, that has not worked to help the average Joe. Now tomorrow we have the key jobs number, and this is going to be huge because tied in, if we miss on jobs again and we don't create more jobs, then there's going to be a problem, because what it's telling you is that we are still in recessionary times. Now we can talk all we want about how well the actual stock market is going, but the difference in the breakdown between Wall Street and Main Street is becoming bigger. And that is a bad effect also on the average Joe. So we have to focus on here is, for us as traders, we don't care. We just want to be able to go in direction. And we want to look and watch what the markets are doing and to play from what the markets are giving us to trade off of. When you trade, you look for levels, you look for markets to do. So we talk about all this news, we talk about everything that's going on, but the bottom line is the market itself is going to go where it's going to go. And we can participate in that market. So whether we are in a recession, during recessionary times, there's plenty of money to be made in the markets as well. During inflationary times, the markets move, and we don't care which way they move. We just care is how we can best benefit ourselves, because stocks will move up in down markets and down and up markets. It doesn't matter. So it comes back down to what the actual charts tell you and what the levels of what you're looking at tell you. Nothing means more than the actual footprints that the markets leave, because that is how we determine what our next trade is going to be. So although I believe we are in a recessionary time, and although I believe we might be on the cusp of deflation, and deflation is not good for anybody. It's better. Inflation is better than deflation. Deflation means that everybody's in trouble, and that's not a good sign. That goes back into the 70s when we had the deflationary times then, and you saw what happened with rates and how it was hard to move money. So remember, watch the tape, watch the action, be ready to react to the markets, and all of this is not as important as reading the chart that you're looking at. That is the bottom line. Read your charts and forget about everything else once it comes down to make that trade. For Thursday, the Bubba Show, have a great day. We'll talk to you on Friday.